A very good evening to all of you. Welcome to today's YouTube live session. Today we have our practical session number 12 for the year 2024. Myself, Srijit Kakkar, and today is Saturday, 23rd of March 2024. And before we move ahead with the session, let's get done with the basic formalities. So make sure you people go through the disclosure, which talks about the representation risk disclosure, risk involved in the market, and also about the copyrights. So today's session is our practical application of demand supply methodology. Now, demand supply used to be our paid course, but we have made it absolutely free now. In case you have not yet learned the methodology and you wish to learn it, you can look into the description. You will find the links to the playlist of the course content. It's available in both the languages, English as well as in Hindi, and that is how you can learn the complete methodology. So that is going to take care of the theoretical part. Now, when it comes to the practical application, we do these practical sessions once every week where I take some examples and we apply the complete process, the complete methodology to an example so that you can understand how to plan trades in a very mechanical and rule-based way. Now, during the analysis, I will not be sharing the name of the symbol we are analyzing, but whenever they get triggered in the future, we do the reviews, and at the time of review, I'll definitely disclose what was the name of the symbol. So today we don't have anything which is pending for review. Whatever got triggered in the past has been reviewed. So we can straight away start with our analysis. So just give me a second. Let's get started. Now, I'll also add that during the session, if I'm talking about some documents which are available for downloads, or if I'm talking about, let's say, some videos, you will be able to find the link in the description. So do not worry, where do you find those uh, documents or video links? Everything is available in the description. So yes, when it comes to trading, I always say trading has to be a very mechanical and rule-based process. Now, when you're learning something new, it is a little bit challenging to create a trade plan for yourself, and that is where two documents I've shared with you. One is called as the trade plan steps, or the flowchart, or you can also call it as the walkthrough, which guides us what we need to do as a demand and supply trader step by step. And all these steps, they have their own elaborate rules which are available in the rule book. And this is a conservative rule book. With time, with experience, if you want to make some modifications to it, those modifications can definitely be done. But yes, why we need to be mechanical and rule based, I have explained this in a video, and the title of that video is How to Start Trading. So in case you have not yet watched that video, do ensure you watch it, follow the process that I've explained in that video, because there is no bypassing it. Eventually you will have to go through that process, so the sooner you start, the better it is going to be for you. So what is our step number one when it comes to start planning our trade? Step number one is we need to define our trade purpose. So now the question is, what do we mean by trade purpose? Trade purpose basically implies the expected duration of the trade, and the duration of the trade is from the time you enter the trade to the time you exit the trade. Now, when I'm talking about the exit can be the target, the exit can be break even, the exit can be the trailing stop loss, the exit can also be the stop loss, any kind of exit. So now the question is, why are we starting with the trade purpose as our step number one? And the reason we are doing this is because when we do our analysis, the charts that we use, they are time-based charts, and we have n number of time frames available to us. So the very first challenge we face is that so many time frames are available. So out of these n number of time frames, which time frame should I be using for my analysis? That's the very first challenge. And to overcome this challenge, we do not start by randomly selecting any time frames. We again follow a very logical process, and that logical approach is that we first define our trade purpose, because the longer I want to be in the trade, the bigger the time frame I should be using for my analysis. And similarly, the smaller I want the duration for the trade, the smaller the time frame I should be using for my analysis. So to help us understand what time frames we will be using, we will first define our trade purpose, and logic I've already given you: longer durations, bigger time frames; smaller durations, smaller time frames. So what I have done is I have divided these trades into 4 different purposes, and we call them as hourly income, daily income, weekly income, monthly income. Hourly income implies a trade where my expectation is this trade can last for an hour or maybe few hours. Daily income, a trade which can last for a day or few days. Weekly income, a trade which can last for a week or few weeks. And monthly income, a trade which can last for a month or few months. Now, very important, by definition, I said daily income is a trade which can last for a day or few days, but the markets we are analyzing, if they are not 24 hours market, then I'm pretty sure all of you would have experienced that whenever the market opens, some symbols they gap up, some symbols they gap down. Now, because of this gap up, gap down, what can happen is if you get a gap in your favor, you might get profit, which is bigger than what you were expecting on that trade. But if you get a gap against you, you can also lose more than what you were willing to lose on that particular trade. So that is why my recommendation to all of you is that initially your hourly dailies will be strictly intraday trades. We don't want to take that unnecessary overnight gap risk by keeping these positions overnight. But with time, with experience, if you wish to do that, you can do your daily incomes as overnight trades. Now, weekly, monthlies, anyhow, we're not expecting to get the exit the same day, but that does not mean that we cannot have gap against us for weekly, monthlies. It can happen. But since we are leaning against some bigger time frames, the probability definitely reduces. So, step one is we need to define our trade purpose. And let's assume I opted, I want to plan monthly income trades. Now, once I have decided my purpose of trade, what is going to happen? From the rule book, I'll get to know what time frames I should be using. So if you go to page number 28, we start with the topic multiple time frame analysis, because demand supply methodology is not based on single time frame. Demand supply methodology is based on multiple time frame analysis. So what are the multiple time frames that we use? We use a minimum of 4 different time frames, and we call them as the higher time frame HTF, intermediate time frame ITF, lower time frame LTF, and the refining time frame RTF. Higher time frame is used for demand supply curve analysis, intermediate for trend. On the lower time frame, we identify areas of demand and supply for our entries and exits. And the refining time frame can be used for multiple purposes like fine tuning the zone, different kind of entries like your type 2 type 3 entries, or in case we need to apply some additional rules, that is also where this time frame can help us. Next, what are the 4 different trade purposes? We have already talked about it. What is HIT, DIT, WIT, and MIT? So now the question comes that for every purpose of trade, what will be my 4 different time frames? And we get the answer from this table. Now this table is specifically for NSE because this market is only open for about 6 hours 15 minutes. If you are trading markets which are open for longer durations, then you can refer to this table, which are open for longer durations like your commodities, forex, cryptos. So coming back to NSE, because I opted, I want to plan monthly income trades. So from this table, I got to know that as a monthly income trader, my time frames will be monthly, weekly, daily, and 60. Monthly will be the higher time frame, which is used for curve analysis. Weekly will be the intermediate, used for trend analysis. Lower time frame will be daily. That is where we get our SETS from. SETS stands for stop loss entry target and size. And in case I need to use the refining time frame, then my refining time frame will be the 60 minutes chart, which can be used for multiple purposes like fine tuning the zone, type 2 type 3 entries, or in case I need to apply some additional rules, that is also where this time frame can help us. So as soon as I'm done with my step number 1, I have the clarity to what time frames I'll be using, plus what is going to be the purpose of each and every time frame. So challenge number 1 taken care. Next comes challenge number 2, and that challenge is I do know my time frames, but on NSE we have approximately 2000 plus companies listed. So humanly not possible that I sit and analyze 2000 companies every day. So what I need to do now is I need to have a process in place which can help me get a smaller list out of these 2000 companies, because if I have a small list, it's easier for me to do my analysis almost every other day. But if I have to analyze 2000 companies every day, it's not an easy task. So how do I get that small list? For this, we use certain computer programs which are called as scanners or screeners, and the way these computer programs they basically work is we input certain conditions into them, and then based on those conditions the symbols they get shortlisted for us. So a few examples of these scanner screeners. Example 1, if you go to my website under the free tab, you will see I have created a scanner which is using some moving averages, and based on that it is shortlisting some symbols for us. Second example, on my YouTube channel, search for scanner. You'll be able to find few videos, different scanners, different logics. You like any of those, you can use that. Third example, on my YouTube channel, search for screener. Search for sector analysis, and you'll be able to find a video on sector analysis which can again help you in shortlisting symbols. Fourth example, on my YouTube channel, search for top-down analysis. You again have a video which can help you in shortlisting some symbols. So these are 3-4 different examples using which you can shortlist different symbols. So let's look at few of them before we move ahead, so that you have a little bit of understanding how we can get those symbols. So like I was talking about, once you go to our website, under the free tab, you have stock screener. Because I opted, I want to plan MIT trades, I can click on MIT. I can run the long scan and the short scan. So here you can see the long scan is shortlisting only one symbol for me, and the short scan is not shortlisting anything for me. Now, the very first thing, very, very important you need to remember is, irrespective what scanner or screener you're using, whatever results you get, you can never blindly buy or sell these stocks. So the job of the scanner is never to tell you what you need to buy or sell. The job of the scanner is I can't analyze 2000 plus companies every day, help me get a list of smaller companies, and it just gave me a list of one single company in this case. So I need to analyze this one. If it matches with my trade plan, I might have an opportunity. If it doesn't match, I don't have anything available. Now, many times this can happen. The list can be a very small list, or maybe nothing is getting generated. And in such scenario, or even otherwise, if you want to have a little bigger list, then you can see that in this scanner, I have given 5 different conditions. You'll disable the third one. Run the scan again. I'll do exactly the same thing here. Disable the third one, run the scan again. And now you can see initially it was only giving me a list of one single symbol, but now it is giving me about 149 from here. And then we have 8 from here, which is 157 symbols to look into. So you can see that from 2000, we are down to about 157 symbols. Now, if you feel that 157 is still a very big number, you want a smaller number, you can use different filters. Example, you can say, I don't want from cash segment, I only want the ones which get traded in futures. I'll run the scan again. I'll do exactly the same thing here, not from cash, only the ones which get traded in futures, and run the scan again. And now you can see we have a list of about 46 plus 3, which is 49 symbols. So you can see from 157 I'm down to 49. Now if you want to further make it small, you can maybe go from futures to, let's say, nifty 50, right? Then your list will be even smaller. So you decide how you want to filter it out, but always remember, whatever results you're getting, you can never blindly buy sell, right? So again, the job of the scanner is not to tell you what you need to buy or sell. It is just helping you get a smaller list so that you can do your analysis on that smaller list and identify what matches with your trade plan. Now, if I go to the screener section on this website, you can see you have over 150,000 scanners available to you on this particular website. Some are based on fundamental analysis, top love, candlestick patterns. If I go further down, you can see you have range breakouts, you have your bullish scan, you have your bearish scan, then you have your intraday bearish, intraday bullish, crossovers. So a number of scanner screeners are available to you. And this is just one example of a website. If you do a Google search, you'll be able to find a number of websites, a number of scanner screeners, whatever you feel is the best fit for you. You can use that and get your list. Like in this example, you saw we got a list of about 157. Now, once you start analyzing them, a few challenges which you will realize. Challenge number one, you will see that on majority of these symbols, you don't have a quality demand zone or a quality supply zone on the lower time frame, which means you're wasting your time on such symbols where you don't have anything on which you can plan your trades. So it's a lot of wastage of time, and also a lot of effort you're putting in just to go through the symbols without finding anything that is probably tradable. The second challenge is that even if you're able to find some zones on out of these 157, those zones might be really far away from the current market price. So what happens is, because they are far away, you'll have a longer waiting period before the prices are back to your zone. And during that waiting period, what might happen is whatever price action develops, it might disqualify the trade setup by the time it is coming back to your zone. So these are some of the challenges you face when you are using your scanner screeners, which are based on fundamental analysis or conventional technical analysis. And to overcome these challenges, we have also created two custom built tools which are purely based on demand supply zones. And that is the reason why these challenges we face, because none of these scanner screeners are based on, in fact, those 150,000 plus scanner screeners which I showed you, none of them are based on demand supply zone. So that is the reason, even if something is getting shortlisted, does not guarantee that on a lower time frame you'll have a quality area available to you. So the way we can overcome these challenges is that, like I said, we have two custom build tools. One is called as the alert service. The other one is the screener. Now, the link to the walkthrough videos are available in the description, just in case you want to understand them better. And for the alerts, we also have a demo channel for NSE, for Forex, for MCX. You can join the demo channel. You can experience it. So what alerts they basically do is, as soon as you have a formation of a quality demand area, quality supply area on the lower time frame, you immediately get the notification. So since they are based on formation of demand supply zones on the lower time frame, challenge number one is taken care. Plus the alerts are generated as soon as the zone gets completed. So your current market price will always be close to the zone. So that takes care of challenge number two as well. Now with the screener, you can define how close you should be to the zone before it gets shortlisted for you. And that is how your challenge number two is taken care. And since it is based on demand supply zones, challenge number one is also taken care. Now I have been getting this request that, for screener, you already have a lot of free screeners available to you, for which I show you examples. For alerts, you also have the demo channel, which you can join and you can experience how alerts they work. But for screener, there is no demo channel. So I was getting a lot of requests if I can show the demo of screener, during these sessions, like I show you the example of, the regular scanners. So that is what I'm going to do today. In fact, I'm thinking I'll be doing it almost every other session just to show you how screener can help. So let's assume a very simple example, like we opted, I want to plan monthly income trades. So because I want to plan monthly income trades, I only want to get the list of symbols where the current candle is close to the daily demand area, or the supply area. Now, in case you're only planning long trades, then you're only focused on demand. If you're also planning short trades, yes, you can look for both demand and supply. So what I've done is here you can see that in the screener, so I'm actually using a two chart layout. So don't get confused, right? So this is a two chart layout. So on one chart, I have applied the screener, and in this screener, you can see I've given a list of 40 symbols. Now that's the limitation by TradingView. You can only give a list of 40 symbols. But yes, you can apply the indicator multiple times, or you can use multiple chart layout. You can use multiple layouts, and you can give as many symbols you wish to, depending upon definitely your subscription level with TradingView. But here you can see I've given a list of 40 symbols, and then I have told the screener that only find the symbols where the proximity to the demand zone or the supply zone is 2%. So you can see it gave me a list of symbols that these are the 4 symbols where we are close to supply zone. So here you can see it told me that BPCL, we will be within 2% to a supply area. And that is what you can see here. The high of this candle will be within 2%. You can see it's about, in fact, I need to start from here, right? So there you can see. So can you see it's within that range? And similarly, if I go to, let's say, HDFC Bank, can you see here? It is telling me HDFC Bank will have proximity to a demand area. So if I go to HDFC Bank, oops, HDFC Bank, you will see that the current candle will be close to a demand area. So let's wait for it. So can you see that's where you have your demand, and you can see the current candle is having that proximity to the demand. Let's take one more example. Let's say Titan, Titan. So you will see that here also will be having proximity to a demand zone. So let's just wait for the indicator to load. Perfect. You can see that we are close to that demand area. So this is how screener basically works. You just input your conditions, and this was just one example where I told you, let's assume that I'm planning MIT trades. Now let's take another example. Let's say I plan WIT trades. I only want to plan WIT trades at the best location. So what I can do now is I can tell the screener that the proximity should be 0% because I only want to plan trades in the best location. So I only want to know the symbols where I am already inside a demand area or already inside a supply area. For that, the proximity would be 0% because we will be inside the zone. So it will be a tested zone. So I would also check mark that show tested areas. And plus, I want to be inside the zone. So the closing should be inside of the zone. So if I make these changes and click on OK and now change it to weekly. So now you can see as a weekly income trader, it will shortlist symbols for me where currently we are closing inside of a weekly demand zone or a weekly supply zone. So let's just give it a few seconds. So here you can see have your list. So can you see now I don't have to analyze all those 40 symbols to find where I am inside of a weekly demand area or a weekly supply area. It did the same thing for me within few seconds. So can you see how much time I save? I only need to focus on these 5 symbols if I plan both long and short. But if I only plan long trade, I know Asian Paints is the only one which I can check. So if I open Asian Paints, you will see that we will be inside of a demand area on the weekly. You can see we are inside of a demand area. Similarly, let's say if I open HDFC Bank, we will be inside of a supply area. You can see we are inside of a supply zone. So this is what the screener does. But again, I'll add, just because something is getting shortlisted, do not assume you can blindly buy or sell them. This is not these are not call giving or tip giving services. These are scanners purely based on demand supply zones. And this process is not mandatory that you have to use the scanners or the alert service or the screener. These are just some tools available to you. At the end of the day, it's your call how you want to get that small list, and the process can be as simple as I don't want to use any of these scanner screeners. I want a small list, so I would only be analyzing my Nifty 50 stocks, or I have my own favorite list of stocks which I might want to analyze every day. So choice is yours how you get that small list. I just showed you a number of options which are available to you. Using conventional technical analysis, using demand supply zones, right? So all these options are available to you. So let's assume whatever option you applied, you got a list, and in that list, the very first one was ABC. So we'll start with the analysis of ABC. So what am I supposed to do now? I need to go to the lower time frame. So question is, what is my lower time frame? We got the answer from our step number 1, that as a monthly income trader, my time frames are monthly, weekly, daily, and 60, where daily is my lower time frame. So here lower time frame implies daily time frame. And I need to identify a zone. By zone, we mean any of these 4 structures. It can be a drop-based rally, rally-based rally, rally-based drop, or a drop-based drop. So let's go to our symbol. And for now, what I'll do is I'll just disable all the indicators for a few seconds. Now, when we talk about demand supply methodology, I always say demand supply is a price action based methodology. So what do we mean by price action? Price action means the action done by the price. And what action can price do? Only two things. Price can either move up or move down. It cannot do anything else. But when price is trading in a narrow range, we call it as the period of pause, or we can also call it as our basing. Now, initially, when we start learning demand supply methodology, our eyes are not trained to identify these structures. So that is the time we start with the concept which we call as boring exciting candles. And I have made the boring candle indicator, which is an absolutely free indicator. You can use it for free forever. Similarly, I've also created another indicator called as the explosive move indicator. You can also use it for free forever. And these tools will help you initially start training your eyes. But once your eyes are trained, then you'll start shifting from boring exciting towards understanding what the price action is showing you. Now, as a very simple example, if I start from the current market price and look down, you can see prices moved down, we paused, we started moving up. That's a drop-based rally structure. Similarly, if I look further below, you can also see we moved up, we paused for a while, we started moving up. That's a rally-based rally structure. So you can see that technically you don't require any of these indicators. Once your eyes are trained, you can identify these structures. But if you have some of these tools, they can make your process easier, faster, and mechanical. So we also have an indicator which is called as the demand supply zone indicator, and this is definitely a subscription based indicator, but it makes the process very fast, mechanical, and easier for us. You can see as soon as I applied, it automatically identified all the demand and supply areas on the chart and plotted it for us. So all we need to do now is we need to qualify these zones. Whatever matches with our trade plan can be a trading opportunity. Whatever does not match, we simply skip it. And it also helps us do our multiple time frame analysis, which you will see as we progress. So if I start from the current price, you can see we have this drop based rally structure. So this is also a very common question I get, that what if we have multiple areas on the chart? So should I be using the first one or the second one or the third one or the fourth one? And the answer is very simple. You always use the nearest and qualified. So nearest to what? Nearest to the current market price. So to the current market price, this one is the nearest. But is it qualified based on my trade plan? If the answer is yes, you will use this one. But if the answer is no, you will not use this one. You will check the next one. If this is qualified, you can use it. If it is not qualified, you move to the next one. So that is how the rule is. You always identify the nearest and the qualified. So if I talk about this drop based rally, as we move ahead, you will know that we'll start applying the rules of pivot and authentic zones, which we did in the past few sessions. So since if you have been attending these sessions, you already know what rules we apply. So to make the process a little faster, I'll go through it so that you can understand why we are skipping it. So when we apply the rules of pivot and authentic zones, if you go with the aggressive rule says the move from the zone should have violated an opposing zone on the intermediate time frame. Here you can see even the lower time frame zone is not violated, which means if I apply the rule of pivot and authentic, the aggressive rule, this will not get qualified. Similarly, even if you apply the rule of conservative approach, we need an impulsive move, which will only happen once it creates a new high and breaches this high. So irrespective whether you were applying the conservative rule or whether you were applying the aggressive rule, this will not get qualified for us as of today. So even though we have a drop based rally structure, this will not qualify based on our trade plan. So what is going to happen? Even though this is the nearest, this is not qualified. So what do I do next? I move on to the next one, which is this rally base rally. So let's draw this zone. Let's change this to demand and let's move ahead. Right, perfect. So yes, the next step was to identify the zone. We definitely had the very first one, which we disqualified because based on the rules of pivot nor authentic, it will get disqualified. And now we are on the second one. So once the zone has been identified, you cannot trade them blindly. I have been saying this in almost every other session. You need to qualify them based on your trade plan. Only if they get qualified, they can be your trading opportunities. So we qualified in a two-step process. In step one, we qualified based on certain conditions, and in step two, we qualified based on the booster scoring. So the first thing is, can this zone be a case of level on top of level, and how do we verify that? It's a very simple concept. If you have an intermediate time frame zone and the same intermediate time frame zone divides into multiple zones on the lower time frame, we call it as a case of level on top of level. So again, when your intermediate time frame zone divides into multiple zones on the lower time frame, it is called as a case of level on top of level. So the first thing we understand is that to be a case of level on top of level, the lower time frame zone has to coincide with intermediate. If it is coinciding, it might be a case of level on top of level. But if it is not coinciding, it cannot be a case of level on top of level. So let's verify that the zone I have identified, does it coincide with any intermediate time frame zone? Now in the demand supply zone indicator, you have this feature of automatic settings where you can define your higher time frame, intermediate and refining time frame, so that when you go to these time frames, whatever is the applicable settings, they get applied automatically. So if I go to the weekly time frame, you will see that this is my lower time frame zone, and on the weekly we don't have any zone here, which means my lower time frame zone that does not coincide with any intermediate time frame zone. And if it is not coinciding with any intermediate time frame zone, it cannot be a case of level on top of level. Now this zone is not because of a gap, therefore gap rules will also not apply. It's not a structure of pivot or an authentic zone, because pivot and authentic we only apply to drop based rallies and rally based drops, and we don't even have unstable equilibrium. I'll just quickly show you. So if you go back, you can see the leg out is not going below the basing. To call it as an unstable equilibrium, the structure should have been something like this, which is not happening in this case. So if you talk about all these conditions, none of these conditions are applicable, and if none of these conditions are getting applied, the zone cannot be disqualified, right? Only if these conditions are applicable, then there is a possibility either qualified or disqualified. But if the conditions are not getting applied, is the zone qualified for us? The answer is yes. The next step is now to do the booster scoring. So just because it is qualified again does not mean we can blindly trade it. Now we'll have to understand its quality and the probability factor. So let's do that. So the very first one is freshness. So you can see the zone is fresh. After leaving the zone, price has never been back to the zone, gets a score of 3. Talking about strength, we definitely have an explosive move, gets a score of 2. Your number of candles in the basing is just 2, gets a score of 2 again. And reward to risk ratio will be taking as an assumption. The next thing is location. Now this is also a good example to understand how to handle scenarios where we have demand areas. So let's just wait for a few seconds. You can see we have demand areas, but we don't have any supplies. Now this is not even a symbol which is making all-time highs. So if this was a symbol making all-time highs, we could have applied the rules of all-time highs. But what do we do when we have a demand, but the symbol is not making all-time highs and no supplies are available? Now if you think about it logically, if I start from the current market price and I start looking up, you can see that's the highest pivot point, right? And also the most recent one from the current market. So if I talk about this, and if you think logically about it, the only reason prices would have moved down from here, it has to be some supply. Sorry, right? It has to be some supply. The only challenge here is I can't see that supply on this particular time frame. But if I just draw this complete candle as supply, it's not that we have to draw it. I'm just showing you as an example. So if I draw this complete candle as supply, maybe that supply zone might be visible on a different time frame. So here, if you look at the weekly time frame, let's wait for the indicator to load. You can see on the weekly we do have a supply zone here. So technically we understand if the prices have moved down, it has to be some supply. It's just that that supply might not be visible on a particular time frame, but it might be visible on a different time frame, which you can see in this scenario. So what we do in such a case, we have two options available to us. Option number one, if I'm a very conservative trader, I might say, okay, I have demand zone, but since I don't have supply, I can't do my curve analysis. So being a very conservative trader, I will skip this symbol and I will analyze some other symbol, right? That's the very first approach, which is a very conservative approach. The second one is I do understand that if the prices, they move down, the only reason has to be some supply. So I can use this pivot high as a reference point to do my curve analysis. So what I can do is I can start from this pivot and I can draw it all the way to my demand area. So the only difference now is that I don't have 5 different your divisions. We have 4 divisions, and those 4 divisions are very low of the curve, low of the curve, middle of the curve, high of the curve, and very high of the curve is missing in this case because we don't have the structure of supply available to us. So that is the only thing which has happened, but we are still able to do our curve analysis now. And based on this curve analysis, I can now see that my zone is located middle of the curve location. So middle of the curve will get a score of 0. Going back to the trend analysis, you can see the indicator is telling us we have one supply, one demand violation, which will make it as sideways. If you're going with price action, yes, you can even call it as uptrend. I'll go with the violation of the zones. Next, move from the zone. We need minimum 3:1, we need minimum 4:1, which has already happened in this case because we are planning a MIT trade. You can see 1:1, 2:1, 3:1, 4:1 move has already happened, gets a score of 2. Talking about level on top of level, we have already verified it's not a case of level on top of level, not even coinciding. And talking about trap, we will be able to give it a score of 1, because if I zoom out a little bit and let's take a horizontal line wherever the proximal is and start pushing it up, you can see almost this area which recently has been acting like support. And if we bring in more history, you can see in the past it has been acting like support here as well. It has been acting like resistance, right? Then again here it has been acting like support. So we do have a pretty clean area of support and resistance that is available to us. So people who believe in support resistance, what they'll do is at support they will buy with their stop losses placed below, and those stop losses will be sell orders. And if we have a breakout, then the breakout traders will also sell. So by the time we are into this area of demand, we'll have a lot of selling coming in, and these people will be making two mistakes. Mistake number one, selling after a decline in price means selling at a cheaper price, and in an area where the chart has proven to us that back in history demand exceeded supply. So definitely it can work like a trap, for which I've given it a score of 1. So if you look at the overall scoring, quality-wise, it's a high quality zone, but the probability is not really high, which puts it as a type 2 or a type 3 trade for us. So after applying the boosters, we got to know that if you want to trade it, it is a type 2, type 3 trade. Now, no matter how high the quality or the probability, any trade can be a stopped out trade. So we need to be ready for the worst case scenario, for which we'll do a proper position size calculation. Whenever the prices are back, we'll have to re-verify, because markets are not static, markets are dynamic. Conditions are changing almost every other second, so we'll have to double check, does it still qualify based on our trade plan? If the answer is yes, we place our order based on the entry type, in this case type 2, type 3 trade. And once your order has been executed, then trade management is the last step, where step 1 is 1:1, we make it as break even. And after that, if we get the opportunity to trail onto it, we start using our trailing stop loss until we get the exit. So that is how we plan trades, very mechanically, very rule based. And now what I'll do is I'll take some random queries from the chat box. But before I do that, I would definitely like to add, if you're not subscribed to my channel, make sure you subscribe to it, so that you get updated as soon as these sessions are scheduled. And plus, if you are liking these sessions, hit the thumbs up button. If you have any your feedback, any questions, queries, you can definitely put it in the comment section. If you have some friends or family members who are into trading, you can also share the link with them, because I know a lot of people are struggling with trading. You never know, this might help them. So let's see what do we have in the chat box. All right, so do you combine MIT, DIT, HIT plan all at the same time? And if so, how would you do it in your supply demand indicator without getting confused? So if you're talking specifically about applying it to the indicator, then there is a way you can do that, and that could be, you can just make multiple copies of it. You can see I can say copy and paste, and again paste. So now I know I have three indicators. The lowest one I can set it as, let's say let's say a DIT trade. So this could be daily 65, right? The next one can be the weekly, which will be weekly, daily, and 15, right? And now what I can do is I can keep two of these disabled. So if I'm doing my monthly income analysis, I know the one on the top is my monthly income, so I can keep it enabled. If I want to do, let's say, DIT analysis, I can now disable these two, and I can enable the DIT one. So now my analysis is getting done as a DIT trader. So that is one way. If you want that every time, I don't have to change my settings manually, right? You can apply it multiple times. The other way can be, you can have different layouts, right? You can have one layout for DIT, you can have one layout for WIT, you can have one layout for MIT. So these are few alternatives. If you don't want to change these settings every time, you can just have the indicator applied multiple times, or you can have multiple layouts for every purpose. All right, please tell the MACD and RSI indicator to see. The fact is, Afzal, I don't use any other indicator. My complete approach is through demand and supply, so that is why I don't add on any other indicators. You can try it out. Most of the times you will see that they might not be very helpful, but yes, it's just that I simply don't rely against anything else other than demand and supply. All right. Okay, so I'm asking this because I normally find myself trading MIT, WIT, DIT all together, but trade only best setups that qualify, but it gets tiresome to certain point to do the analysis or of 20 pairs. So like I said, the easiest way can be having a multiple chart layout, right? So that could probably help. You can have multiple chart layouts, and maybe we can apply everything at one go, because just as an example, another way I can just show you is maybe you can do something like this, right? You have a four chart layout. My bad. Right. So I would not be able to show as if now because of certain reasons, but yes, you can have a multiple chart layout, and in that multiple chart layout, in fact, I'll have to open a new one, but just to help you understand, right? Let's say something like this: you have a multiple chart layout, and since you're planning MIT, you are planning WIT, you are planning, let's say, DIT, and you're planning, let's say, HIT. So what I can do is, because the first thing we need is that on the lower time frame we need to have a quality area, right? So this can be my daily as the lower time frame, this can be 60 as the lower time frame, this can be 15, this can be 5. So as soon as you change your symbol, what is going to happen, it will show you the zones on all these four different lower time frames. Now if you feel you have something quality, then you can proceed ahead. But if you don't find anything quality on any of these four time frames, you're done with that particular symbol, right? So that could be one way. The other way is, like I showed you, the screener, right? Based on that, you can create your screener so that you're only able to shortlist the ones where the prices are close to the kind of zones you want, and then you can do the analysis for it. So it's your call how you want to go ahead with that. All right. Please make demand supply zone indicator available on done. It will be very helpful. See, the fact is that the indicators, that I have created, even if different platforms like Dhan, and I know few more platforms who are using TradingView, you can't have custom built indicators on them. And even if it is possible, I would still not like to do it, because the reason is, if you're talking about Dhan, then they are only catering to one market, which is the Indian market, right? But if I'm doing it on TradingView, it is available to anyone and everyone across the globe. So that is the reason we are more focused on TradingView, so that anyone and everyone can use it, irrespective whether they are trading the Indian markets or the international markets, whether they are trading stocks or currencies or futures or cryptos, right? So it becomes more of a universal platform. That is the reason we are more focused to TradingView in that regard. All right. And how can we make a living by DIT, WIT trades? Please provide some. See again, Saad Malik, right? Talking about how can we make a living. The first thing is, you need to have that confidence that yes, I have been, profitable for a longer duration of time. By longer duration, I'll say at least you should look at least 3 quarters. For the last 3 quarters, I've been a consistently profitable trader, making money, which is probably 1.5 times or maybe even twice whatever your monthly income is as of now. So once you have that confidence, only then you can rely on trading as a primary source of income. Before that, you should not be doing it, because if you make that shift before getting to that level, you will have a lot of emotions, and the emotions will make you lose more versus make you win more, right? So that is why the process that I've explained, how to start trading, start with that. Start building up your confidence. It's not something which happens overnight. It definitely takes time. So give it that time, and once you reach that point which I just explained, at least 1.5 times or maybe twice of whatever is your monthly income as of today, then you can think about making that shift. All right. uh, Great. How do you differentiate quality demand and supply zones from the rest without using the indicator? See, the fact is, I have been doing it for a number of years. I started doing demand and supply since 2012, right? So it's been almost 11, 12 years I've been doing demand and supply. So now the problem is, people who are just starting, developing that eye definitely takes a lot of time, and that is where these indicators, they help you. And the fact is, if I talk about my personal trading now, the indicators have been designed by me, so I use purely my indicators now. I don't even try to identify where the zones are. Wherever the indicator is identifying for me, it makes my process faster, it makes it mechanical and easier. But yes, if you want to do it without the indicator, it is all about practice. The more you practice, the better you'll start getting with it. Or so does the Fibonacci levels give boost with demand? So see, factors I've never applied. You can try it out. If you feel that you're getting some better results, do let me know. But I have been doing without applying anything else than demand and supply. I'm happy with it. All right. Would you make one example with the forex pair in the? See, the fact is, it doesn't matter, right? What if this was USD INR, or maybe Euro USD, or maybe GBP, USD, right? It could be anything. So the fact is, irrespective what market you're trading, things they do not change. But yes, if you want to look at some examples, long back I used to do the weekly analysis sessions where I would cover some forex pairs, I would cover some cryptos, I would cover commodities as well. So you can just go through that watch list. You will see, not watch list, that playlist, and you will see that playlist will be having at least 2 to 3 years of videos which are purely on different symbols, including forex. So you can go through those videos. That is already available on my YouTube channel. All right, so that brings us to the end of today's session. Next, we will be catching up the next weekend. Until then, fit safe, enjoy your evening, and wishing you all a very happy Holi. Take care. Bye bye.